You're looking at live pictures now from the APEC Leaders Summit in South Korea. We are live for you from Gyeongju, South Korea this morning, 10 a.m. here in the city where Chinese President Xi Jinping is expected to speak later on. You're watching The China Show. I'm Yvonne Man.
Good morning to all of you. I'm David Ingles here in Hong Kong. We're also counting down to the final sessions of the week, Hong Kong, Shanghai, and in Shenzhen. Let's get to your top stories today. Stocks across Asia Pacific are set for a second week of gains. As you can see on the screens right behind me here, you have trade optimism where Yvonne is following President Trump's meeting with Chinese President Xi Jinping. But we have disappointing earnings out of China. Could drag on sentiment. You have BYD in focus this hour, reporting a 33% slide in profits. That's as industry competition continues to heat up. But Apple shrugging off a slump in sales in China as it forecasts a bumper holiday sales season led by the latest iPhones.
All right, the focus now moves from Busan back to Gyeongju, South Korea, Dave, this morning. Of course, as we mentioned, CCTV reporting this morning that Xi Jinping is expected to make that speech here at the Leaders Summit. And really, we'll see what he has to say, right? The whole theme of this Leaders Summit, as the 21 leaders gather, is really going to be about economic cooperation in the face of a changing world order. And, whether he mentions anything about what happened yesterday, where, Presidents Trump and Xi did try to dial down the temperature and really try to ease their ongoing trade war.
Yeah, 12 out of 10, I believe, is how the U.S. president rated that speech, 10 being the best. And I think that really sets us up, nicely when you look at risk assets. You're looking at live pictures right now, I believe. There we go. That is the Chinese president, Xi Jinping. They're arriving among this long list of leaders, one by one, making their way into the venue. And of course, we are expecting, based on what state media have reported in the last, let's call it 30 minutes or so, a speech coming through out of the Chinese president today. We'll keep an eye on that in terms of the exact timings. We're still trying to figure it out. But in any case, of course, lots of things to watch really on the back of that meeting yesterday that Yvonne was covering. And if you think about it, this reset for about a year. We'll talk again in about a year. Scott Bessent, in his interview with Fox News, talking about how, in about a year's time, they do expect to be back at the negotiating table to take stock of what they've done last 12 months or so and what this really means for the further and longer-term relationship between the two things. But yeah, Yvonne, it's been extremely busy where you are. Get us up to speed what's going on right now outside the venue.
Well, as you say, right, President Xi is there. He just shook hands with the South Korean President Lee Jae-myung. There's going to be a lot of bilateral meetings happening here. Now that President Trump is gone and has headed back to the White House, the spotlight is back on the Chinese president here when it comes to diplomacy side of things. We talked about Takaichi and Lee Jae-myung meeting yesterday. Takaichi, now the newly elected Prime Minister of Japan, is expected to meet with Xi Jinping. She wanted a summit with the Chinese president here. Of course, there has been long talks about whether we do see some sort of trilat between South Korea, Japan, and China as well. And as you talk about this whole trade deal, 1 year truce, certainly doesn't show. It's hard to kind of say this is an inflection point in some ways, but yes, we did see both sides willing to dial down the temperature here. Let's bring in our Chief of Asia correspondent, Stephen Engel. He joins us now from the outside of the APEC Leaders Summit venue on what's really in store here today, Steve. And really, we're still talking about what came out of these trade negotiations between Trump as well as Xi yesterday.
Well, I agree with you that the focus now switches to Xi Jinping. So, interestingly, we had Donald Trump for the first couple of days. Then they met at the airport yesterday, and he flew back to Washington. And then it was Xi Jinping's turn to take his role here at APEC. and also meet with the leaders as well that Donald Trump, some of whom he met. Of course, he's going to have a likely meeting today with Mark Carney, the Prime Minister of Canada, and you mentioned Sanae Takaichi from Japan also later today. But we will be watching and listening closely to Xi Jinping's speech today. I expect it to be a similar type of speech that he's given in the past, where it needs to be, a rules-based global order and multilateralism instead of unilateralism or bilateralism, and promoting a rules-based order for global trade. Whether he uses the word after, 24 hours after meeting Donald Trump, bullying, which is a common word that the Beijing authorities have used in a not so veiled reference to the United States, will also be interesting to see what the springboard from that fairly cordial meeting with Xi Jinping, with Donald Trump, will be like going forward. You mentioned about this 1-year pause, and then we'll renegotiate every year, is essentially what Donald Trump has been saying. He says it will be routinely extended, this trade truce that they came to a meeting of the minds yesterday on, but it doesn't resolve the long-standing structural issues and the competitive nature of the two nations. So we'll have to see. Every year we might be seeing what we had previously seen in past U.S. and Chinese administrations, and that is sort of a strategic and economic dialogue held every year to get over some of those nitpicky issues that kind of build up and become bigger issues over time. So I'd like to see how that, transpires going forward. But one thing that is clear, Jamieson Greer, the U.S. Trade Representative, fresh back from the Asia trip, speaking on Fox News, was essentially saying, we're not scrapping this investigation, which they launched a week ago, into China's compliance of the first trade deal from the first Trump administration. We thought a lot of these issues would be tabled for a while, tabled for a year, but Jamieson Greer says, no, we're going to continue with this investigation because, again, China had committed to buying a significant amount of corn, a significant amount of soybeans that last time, but according to the Corn and Soybean Associations, they fell far short of that commitment. Granted, the pandemic happened after that trade deal happened, so that kind of disrupted a lot of those commitments.
Steve, we'll be back with you later on. Of course, Stephen Engel outside the venue there, where, as you can see on your screens right now, some of the world leaders are already gathering there for this APEC Leaders Summit that's about to begin. We understand from state media, just to reiterate that Chinese President Xi Jinping is set to speak today there at the summit. Okay, we will table that for now. It certainly provided a platform for risk assets to do quite well. Let me also caveat that by also saying, when you look at the U.S. futures, for example, a lot of this is also down to the massive after-hours move we're seeing in the likes of Apple. So we are getting a decent run-up into the weekend here. When you look at Asian stocks, 2 straight weeks, global stocks extending that by a week, so 3 straight weeks. We'll look at BYD a bit later on, of course, as we look ahead to these earnings and the earnings reaction there. In fact, later on, I'll show you this, what happened overnight and some of the listings there. Dollar is softer following that massive repricing around the Fed. We're coming off the best day for the dollar in several weeks at 12.17, 12.18. We're back to the highest levels there since July. On the U.S. dollar. Yields also, as you can see, have picked up from 24 hours back. We'll talk about Japan in a moment because there's a bit of a nuance here with the inflation print, which did come through a bit hotter than expected. So we've come off the 154 handle. Very quickly on metals, I won't spend too much time on this, but there's a large industry group, the top industry group in China, effectively calling for a ceiling on capacity. Golden Dragon Index, a lot of the big tech plays overnight in focus, massive move down in K-Web. Baidu, and as you can see, BYD was off 4%. We're looking at about a similar amount in terms of the indications going into the open today. And A50 futures coming up on your screens. The opening bell, 21 minutes away. We should be pointing slightly higher on A50 coming up. There we go, 0.2%. Right, what else to watch? Yvonne, let me bring you back in. So we have, of course, Chinese President Xi. He is set to speak. What else are you tracking, Yvonne?
Yeah, so we'll see how the speech goes. CCTV saying it's Friday morning, so we'll bring it to you once we hear more. And really what we're talking about is the handover ceremony, right? Because APEC does move to China next year. So that is kind of part of the theme here at APEC as well. You mentioned about BYD. I mean, it was a 33% hit or slump in quarterly profits. So it could be a big one there for the EV sector. And we're watching, of course, this tech route, as they've mentioned. We have some eco data coming out of China as well as in Hong Kong here today. We're focusing on the Apple story here, on the suppliers in particular, because it was the guidance, right? This blockbuster holiday season when it came to iPhone sales that really sent the stock flying after hours as well. And still, we're still talking about some earnings a little bit later on here also. So certainly going to be a big one. Li Auto, Zhejiang Expressway, all reporting results today. We're going on back to live now at, of course, those live pictures, certainly in just a moment once you bring that in. But David, let's talk a little more about earnings, right? It's still kind of the key thing here, beyond just the geopolitics and what we've been dealing here in Gyeongju.
Yeah, we've been trying to balance really, and just the finite amount of airtime and space we have here in the shows has really been a challenge. And it's I think that's a good problem to have. That takes us back into, in fact, I think I'm just looking can we have my notes, please, on Apple? Thank you so much. I think I just passed it on there. So, okay, we'll talk about Apple here. So the actual results were okay. The guidance actually was the one that the market reacted to. We were up 3-4% in after-hour session. Really good guidance as it pertains to this surge that they are expecting ahead of the holiday season. Edison Lee is with us right now, head of China Tech, Telecom, and Software Research at Jefferies. He joins us right now to talk us through these earnings. He, of course, has an underperform rating on Apple. They put that rating back, I think, about 3 or 4 weeks back. Edison, good morning, and thanks for coming on the show. So just help us understand, how are you thinking about Apple now following, well, for one, your downgrade 3 weeks ago, and do these earnings make you change your mind in any way, Edison?
Well, I think that the iPhone sales are certainly better than expected. But I also think that it is driven mainly by very smart and aggressive pricing by Apple. So number one, on the Pro and Pro Max model, they haven't raised prices 3 years in a row, even though BOM costs are rising. And I think that they priced the base model pretty aggressively this year with double the memory, but charging you the same price. And that also allows them to get into government subsidy program in China. And that's why that is driving pretty strong growth in China. But I think that going into next year, there will inevitably be more margin pressure because memory price is going through the roof. And I think Apple is moving to 2 nanometer as well next year. And that's why I think that they have to raise price next year.
Okay, what does that mean for demand?
Well, I think with price increases, you cannot be too aggressive in your demand forecast. If you look at the sales situation of iPhone 17 this year, it actually tells you that demand for iPhone is actually price sensitive, right? Because there are no brand new features that your existing iPhone cannot do. So that's why if you price it aggressively, there will be replacement demand. If you price it high, then the replacement demand may not materialize.
Edison, I was going to get your take on Apple and China. I mean, $14.5 billion last quarter in terms of revenue. Yeah. That fell short of estimates here and really falling some 3% or more. You know, it seems like they're really kind of being, competing and actually losing out on a lot of the competition locally there. When do you see Apple returning to growth in the mainland?
Well, in fact, I'm not that worried about China because, as I said, they priced the base model of 17 more aggressively in China than outside of China. My estimate is that the price in China is actually 10% lower than outside of China. And we have seen pretty good demand based on some data points that we spotted. And we think that fourth quarter, they will actually get back to positive growth. But of course, as I said, if they price aggressively every year, there will be margin implication. So this year, I think it's a very smart pricing strategy, and there is government subsidy, which is actually helping iPhone sales in China.
Edison, you're one of the few in the street that actually hasn't underperformed on the stock. I believe you're just one of 4. Yeah. Can you tell us what's behind that sort of call here right now? I know you mentioned that a lot of the optimism around iPhones and is really in the price. What else do you think is the rest of the market missing?
I think that the entire smartphone market is a very mature market. And this replacement demand is price sensitive. And if there are no brand new features such as AI that can actually convince most of the consumers to buy a new phone right away, I think that there will eventually be slowdown and there will be eventually margin pressure, right? As I said earlier, component costs are rising, particularly right now because of AI, memory pricing is rising. And that's why if they raise the price to cover additional costs, that actually can impact demand unless there are brand new features. But at the moment, we are not really seeing brand new features driven by AI that is telling consumers that you need to buy a new phone because your existing phones would not have those functions. And that's why that replacement cycle will accelerate. I think that's what the bullish investors or analysts are looking for, which is an accelerated replacement cycle. But so far, what we are seeing is that it's more price sensitive, and the strong demand is actually driven by more aggressive pricing or disciplined pricing than new features.
Yeah, but clearly Edison thinner, making the iPhone thinner is not enough as far as you're concerned. Edison, if I could just ask you about, Chinese tech, if we could pivot our attention there. So I want to ask you about Xiaomi. So what's happened with the stock? And what do you think the market's pricing in? Do you think this is just profit taking that's taking place? Because I also believe, I understand that you think the sell side might be a little bit too optimistic over the stock price. What's your thinking on Xiaomi?
I think that the smartphone business is under more structural pressure, mainly because, as I said, Apple is pricing the iPhone 17 more aggressively, and that actually will make it harder for any Android brands to move up market. And then I think the majority of their sales outside of China on smartphones are still mid to low end, and that will also put them under more margin pressure when memory prices continue to go up. But we like the ecosystem a lot. We like the EV business. We also like the IoT business. And we think that they are probably the only consumer electronics player in the industry that can actually offer this unique ecosystem. And every item that they sell collects data that allows Xiaomi to understand their consumers' daily habits even more deeply than the like of Apple. And that's why we think that longer term, the ecosystem is still very unique. There's a lot of AI potential that Xiaomi potentially will be able to offer that allows them to continue to gain share and also increase the ASP. But it is true that in the short term, there is more pressure, mainly because of rising component costs for the smartphone and also Apple becoming more aggressive and trying to defend market share in the like of China.
Edison, what we got here in Busan was that when it came to these discussions around chips in the U.S., Blackwell, that AI processor line from Nvidia, was not discussed in China. That is still something that Chinese companies cannot get access to right now. Is there anything actionable on news like this? Should I be kind of looking still more on some of these homegrown chip makers? Are they likely to benefit from news like that?
I think longer term, China definitely wants to be able to make its own chips. So I'm actually not sure about how much interest China has in buying the more advanced US AI chips. But of course, China is somewhat capacity constrained, right, on semiconductor, mainly because they are also restricted by the US on semicap equipment. Even though the two leaders did not really talk about chips yesterday, but I'm sure that it's going to be part of the discussions over the next 3 months. And there will be more details that the two teams will have to work on over the next 3 months. So that's why I think yesterday, the major announcement made by President Trump, I think, is more on the key points that he wants to advertise to the market. I think there are still a lot of work that needs to be done by the two teams on exactly how they can actually reconcile the differences and how they can actually move things forward. Otherwise, if there is no agreement or consensus on those differences, I think it's difficult to have a sustainable trade deal.
All right, Edison, thank you so much for the time, sir. Appreciate it. As always, let's talk again soon. Edison Lee, their head of China Tech, Telecom, and Software at Jefferies for us. Right, we're just under 12 minutes to the opening bell. Shanghai, Shenzhen, and here in Hong Kong. The final session of the week is just ahead. A full preview of everything that's in store today. If we could fit everything in shows today. Happy Friday to all of you. Good morning. This is The China Show. Right, one stock in focus, BYD. We're almost at the brink of 100. We're down 3.5%. Bad earnings coming through, 33%. We'll talk more about this in a moment. Plus, of course, HSBC joins us in about an hour's time to further unpack these earnings and what it really means for the stock price moving forward. Right, let's get it back directly on more broader markets right now, given all the events this week, earnings, monetary policy meetings, and, of course, geopolitics in Korea. Joining us this morning is Christy Tan, investment strategist at Franklin Templeton Institute. Christy, good morning, and thank you for coming on the show. The U.S. president, I'm just reading the headline here from the FT, hailing this summit at 12 out of 10. Does that mean we can relegate now geopolitical risk, trade tensions further down that risk spectrum?
I think that is, I would say that, that is warrants a discount to that rating, right? The Busan summit definitely did deliver some progress. And this was achieved, in terms of diffusing the global trade tensions. But I would say that to extend that to say that the geopolitical risk premium has declined significantly, I think that would be a bit far-fetched at this juncture. And but there is a positive tone that's being built on the bilateral trade discussions, and that's not just between U.S. and China, but also, early part of the week between U.S., Korea, and even Japan. So we're definitely looking at these deals or frameworks being developed, right? And overall, I think definitely what's been achieved is a de-escalation of the global trade tension.
Okay, so if that's the case, can I continue to buy Chinese equities? What's in store for the rest of the year?
Well, for Chinese equities, and I recall that we had this conversation sometime last year, and we've been constructive and bullish on Chinese equities since. And should we continue that level of optimism on Chinese equities? I think the answer is yes. Well, mainly because there is this policy support that is coming out from the fourth plenum. And this is about rebalancing growth. This is about attaining the quality of growth. And a lot of focus is increasingly on private consumption and investments. Yes, we have heard about this before, but I think there is a more targeted approach going ahead. And because this is the start of the next 5-year plan, the GDP target of 4.5 to 5%, I think that will be implicitly the continued long-term target. And in order to meet that objective, a lot of the policy measures have to start delivering. And we're talking about, private consumption measures. We're talking about the development of tech and AI in that space. So if you're looking at where to invest in China, a few of the sectors that have recently been caught investors' attention is that, there has been some kind of a shift in sentiment. I think investors are still adopting some cautious sentiment on China, but there has been a shift from, say, growth or the tech sector to the value or the dividend sectors. But having said that, I think that this is not something that will continue to persist in the concentration of one sector to another. But there is this theme that is, we are definitely have been delivering, that is basically that the markets is broadening. So the market's broadening outside of the US, the market's broadening also within, Asia and definitely within China. Yeah.
More stocks in focus. Christy, we'll have more with you in a couple of minutes. Christy Tan will be staying with us. She's, of course, with Franklin Templeton. We'll be revisiting that, of course, in a couple of minutes at about the open. Just very quickly, going into the open today, so pre-markets are coming up. Within this, we're in the thick of earnings season. BYD is one of the names we're tracking, the other one being China Vanco, which reported a deeper loss. But in terms of BYD, there we go. Market reaction is one that is clearly to the downside. We're down 3.5% on that. Other stocks we're tracking going into the open today. You have BYD, of course, coming up on your screens. You've seen Costco Shipping, China Vanco. I think, give or take, we're about 80+% into earnings season. MSCI China specifically, most have actually missed on revenue and also as far as income goes. Now, the other side to that story is markets have actually been rather lenient they've actually reacted more positively than negatively on the first day after their earnings release. We'll have a look at the data in closer detail. Banks as always. Anyway, this is the bank story. Apple suppliers in focus following the guidance coming through out of Apple overnight. Futures are up, after hours are up, U.S. futures are up, and nothing much to tell you about as far as this is concerned. Also coming up, by the way, PMI numbers coming out of China in about just over 3 minutes from now. We'll get you those numbers once they do break. Plus, of course, we also have some economic numbers coming through out of Hong Kong. September retail sales plus GDP numbers are coming through as well here in Hong Kong. The opening bell is just over 3 minutes away. We are going into the weekend with some momentum across the Asia Pacific. Maybe the same can't be said when you look at these greater Chinese markets. Plenty more ahead here on The China Show. Good morning.
Welcome back. Happy Friday. You're watching The China Show. We're kind of now the market opens there in the mainland and here in Hong Kong. And certainly we are still waiting for the dust to settle on this whole trade deal between U.S. and China. Seems like investors are putting that on the back of their minds here right now. We're focusing a little bit more on the earnings side of things. BYD already in the pre-market is showing here it could be a big of a drop here at the open. But certainly the focus here at APEC really, Dave, is going to be Xi Jinping. The spotlight back on the Chinese president. Now that President Trump has returned to the White House, and that speech he's going to have any moment now, it seems.
And we'll wait for that, of course, and what he says and how he addresses, of course, given the theme, of course, there of a sort of inclusive economic cooperation, given the changing world order, is certainly really good context. Following also that reset in relations and that reset in economic dialogue over the next, we'll see you in 12 months, I guess, is one thing. It does open up the door, though, to visits, right? Donald Trump to China, and shortly after that, I believe, is in terms of the sequence of events, is perhaps a visit of the Chinese president to the United States. All that is just to say we're looking at markets right now, an uneventful open, a lot more pressure coming through in tech, which is really what the price overnight did indicate, the likes of Alibaba and Baidu coming up shortly on your screens, perhaps following the move down in the U.S. session overnight. The other story as well is BYD. That's going to come up on your screens very shortly on the back of those earnings release that's come through, and not a good set of results. Min Min will be joining us in a couple of minutes. Oh, look at that. We've now taken out the 100 level on BYD. We're down about 5%. Yeah, market's not taking this one well. Just very quickly before we turn it over now to Min Min for a breakdown of that. Yvonne, you're looking at the PMI numbers.
Yeah, so we're taking a look at when it comes to manufacturing PMI. That was a miss at 49 for October. So the estimate was for a 49.6 print, and this is showing another further softening of these numbers here and marking now a 7th straight month where these PMI numbers have been in contraction. You're seeing that quick whipsaw in the renminbi here, seeing a bit of weakness in the back of these numbers. But yes, there is a bit of caveat around it, given the fact that this was, of course, during the national holidays. So seasonality is one thing of maybe why the numbers were a little bit weaker here, right? There was a bit of a holiday lull. Also, maybe some uncertainty around these threats of U.S. tariff escalation as well. So there you go, 49 when it comes to manufacturing PMI. When it comes to the non-manufacturing side of things, that was in line. We're talking about 50.1. So still, when it comes to that, expansion on the non-manufacturing side, Dave.
Yeah, I mean, the currency is telling you already how bad this number is, right? We're looking at some really visible weakness coming through in the Chinese currency. And more context, really, what Yvonne was just saying. At 49, it actually missed everything. It missed all the forecasts there. So the seasonal adjustments being made, you would imagine, of course, that somehow that should have been taken into consideration when you look at these forecasts. But yeah, that also just means to say it's also more difficult to extrapolate a projection because of the seasonality factor, just to obviously split the difference there. Anyway, okay, let's turn our attention now to another one that perhaps also missing the mark here, which is earnings, and that is BYD. 33% down. That's quarterly profit. That's year in year, to be more specific. You have domestic competition. You also have a drop in revenue as well. Let's bring in our China correspondent, Min Min Lo, here in Hong Kong. And Min Min, the stock price reaction is already quite telling on this one.
Yeah, and it wasn't that long ago that this company was making headlines for beating Tesla on sales, but now there is increasingly a lot of concern over its profitability because it's down 33% this quarter. That follows from the second quarter, a decline of 30% in net income. And this time, the sales was also down 3%, vehicle deliveries down 1.8%, and the company already cut its goal this year by about 16% in terms of vehicle sales. The only bright spot now is the overseas push because overseas sales was up 160%, and this company has been doing very well in the EU, in the UK. The EU, for example, it saw a 5-fold increase last month on year. It's also just launched this mini K car in Japan, the first one that it's launched after, I believe it's 5th product that it's launched in Japan, and that's a notoriously difficult market, and this mini car expected to do a little bit better than its previous products. But still, the overseas sales not enough to offset that margin pressure domestically because of the intense price competition.
Yeah, Min Min, then what's next, right? If even overseas expansion, I think BI's Joanna Chen told us, it's a pivotal year, 2026, for that. Still not enough to offset what's happening domestically. How can it recover from what's going on domestically?
Yes, so overseas expansion is one part, is really doing very well in the developed markets like the EU and the UK. It's also expanding into emerging markets like South Africa, heavy investments there to build out the infrastructure, the charging stations there. But domestically, Q4 is expected to look a little bit better because consumers are expected to front load any purchases to make use of any existing subsidies that could expire by next year because we're still not sure whether the Chinese government will renew those 300 billion yuan subsidy program next year. So next year, 2026 sales is going to be under a lot of scrutiny. But one of the reasons why sales has been lagging in the third quarter, some analysts say, is because BYD has been focusing on destocking its current inventory as it looks towards new product launches in 2026. So any tech upgrade, new product mixes, those could be new catalysts for growth.
All right, Min Min, thank you. Our China correspondent there. With a breakdown on BYD, of course, as we talk about those shares continue to be falling here this morning. We're going to continue the conversation around BYD coming up. We got HSBC Global Research's Yuqian joining us, explaining why they're still maintaining a buy rating for the stock, Dave.
Yeah, B-U-Y, not B-Y-E. Okay, Christy Tan is still with us, investment strategist at Franklin Templeton Institute. Christy, so we talked about the Apple story, Amazon, decent earnings out of U.S. tech. We have this fantastic piece that's out on the Bloomberg today that talks about when you look at the Asia Pacific, so Korea, SK Hynix, Samsung, you look at Japan, Advantest. The role of tech in investment strategy, how do we need to be looking at concentration risk in equity markets right now?
Oh, that's a really interesting question. So one of the themes that we have mentioned, that we think will play out across 2026 is essentially the theme of broadening. So we are not just saying that the concentration risk in the U.S. I think that is reflected with regards to the market cap of the Max 7 that has shown some signs of broadening, and broadening will actually be positive for continued bullishness in the equities markets. And we think that applies as well across Asia Pacific. And the broadening theme extending from the US over to Asia. So if we're looking at, I think you've seen the latest results out of China with regards to the EV makers, right? So you're looking at some sectors that has done well in the past, but needs a certain push or booster to continue to do well. But the underinvested sectors, as if you're looking at just China, and even I think the concentration risk in South Korea is significant, right? I think the huge outperformance in the Korean equity markets, almost up 70% year to date in the Kospi, is essentially a highlight highlighting that concentration risk. And we do think that for the equity markets to continue to extend its strength, that broadening trend emerging out of just a concentration in Samsung or SK Hynix, that will be a precursor to better performance or strength, continued strength in the Korean equity markets. So in China, foreign investors are still underweight, right? And we do think that there has been a lot more optimism that has been building, not in the EV space, because that's essentially where the involution or excess capacity and perhaps reduction in demand will emerge as problems and potentially structural. But in terms of China, the high-tech fields that is around AI, around robotics, biotechnology, automation, that continues to show signs of growth and progress. And we are looking at two indicators going forward, right, along with the broadening theme. One is liquidity. So where the market's liquid, where liquidity is actually flowing into these markets, we think that these markets will do well. So definitely where interest rates are being reduced, and we're seeing this happening globally, these markets will continue to be fed with a lot of liquidity. And earnings. So earnings is the other important driver for these markets to continue to attract capital. And we do think that, this earnings seasons we've seen in the US is pretty good. I think 85% of those that have reported earnings thus far has shown, they beat expectations. And we'd like to see that happening across Asia Pacific as well, be it in Korea or increasingly in Japan. And also, in China and some of the Asian counters.
Yeah, Christy, you mentioned about the Fed in the face of all this. I think the market up until maybe this week thought we were going to see rate cuts in December. I think Jay Powell really kind of poured cold water on that in this latest FOMC decision. How should I be looking at that? Is that going to be a tailwind that basically has now have to be reduced in this market?
I think we saw overnight markets reacted to that, right? And the Fed has definitely raised the probability that the October cut yesterday was going to be the last for the year. And that's not being priced in yet by markets, but potentially markets could start to price in the other extreme as well, that this could well be the last cut in the whole cycle. So after all, I think it could be justified that inflation environment is still around 3%. So it's still elevated. And at the same time, I think, Fed Chairman Powell shows that, there are two dissenters as well. So the Fed is getting more and more divisive in terms of policy direction. So we've seen that, the December rate cut expectations being tapered to around 60% or so from above 80%. And I think going forward, we could potentially still continue to see that markets price out expectations of more rate cuts. And in that effect, is that going to be a huge negative driver for the U.S. equities markets? Now, the Fed is not cutting also suggests that the economy is not tanking. So I think we're looking at the economies that are still showing signs of resilience, and which also means that, if you then look a layer lower at the companies and companies' performance, we want to see all this AI and the CAPEX spending into these AI sectors being delivered as productivity gains or as savings in companies that are deploying these AIs and automation. And so that will help to improve companies' bottom line as well. So I think that is the offsetting factor, which a lot of investors are definitely looking beyond what the Fed policy will do. So the economy is resilient, company earnings will still continue to deliver, and we'll start to see the productivity gains from the AI deployment and from the return in all these CAPEX showing up. So I think that will be supportive of risk assets.
All right. So bullish. Christy, thank you so much. Christy Tan. Happy Friday. Have a good weekend ahead. Investment strategist at Franklin Templeton Institute. Right. We'll take a short break. Time for to stretch your legs, what have you. whatever floats your boat. We'll be back in a couple of minutes.
Welcome back to the China Show and some other headlines that we're tracking for you this morning. Changqing Memory Technology says that it has begun mass producing an advanced type of chip for mobile devices. It's become the first Chinese company to compete in a field dominated by foreign players like Samsung. The company says it started shipping the advanced chips to unnamed clients. Bloomberg has learned that Germany is considering using public funds to pay Deutsche Telekom and other operators to replace Huawei equipment. Sources say the cost could exceed $2.3 billion, and this also means public funds will be used to upgrade Germany's digital infrastructure, which lags behind many other European countries.
Right. Let's talk about concentration risk, right? The role of the dominance, let me rephrase that, the dominance of tech in this rally, in this frenzy over artificial intelligence has really helped Asian stocks really perform. If you just look at Korea, for example. It's also transforming, by the way, the markets here in the region in a way that actually has fund managers racing to keep up. Quite a dilemma there when you have mandates that limit you to a certain degree, to certain stocks. Winnie Xu is here with us, our Asia equities reporter, to talk us through her piece for today. Concentration risk in Asian markets. How do we need to be looking at this?
Yeah, exactly. It is that big change, I think, this year that's changing the market quite a bit. So you look at different indexes, right? Because, for example, for the TAIEX, we have the TSMC approaching 45% of the whole index. And then Samsung plus SK Hynix about 30% of overall Kospi. And also Nikkei 225. Now you have Avantas, right? Taking the top number one weighting of the entire index. So it seems like really we are seeing this tech dominance in Asia, which doesn't usually is the case, so it was usually a bit more traditional, but it's now more tech dominant. And we are seeing that investors are really changing their portfolios and changing their strategies around this.
Yeah, what kind of issues does it create for fund managers, Winnie, here, and how are they navigating all this now?
Yeah, Yvonne, exactly. So especially for the investors that are investing against the benchmark of Asia ex Japan. So, for example, they have right now with the benchmark TSMC already crossing that 10% level. So right now TSMC accounts for about 12%. So you have a lot of funds having that cap of limiting their individual stock exposure to less than 10%. So that means that they actually need to find other opportunities to make sure that they don't underperform these benchmarks. So some of the examples that we are hearing is that, one, you pick some of the the ones that have these competitive modes, whether it's Tencent, Foxconn, industrials, so investors piling into these names, or they're looking for opportunities along TSMC's supply chain. So some of these Taiwanese tech names are also benefiting from that kind of shift. So for these investors with that cap, you are seeing that kind of rotation. And for investors that are benchmarking towards, for example, the MSCI Asia, then you have TSMC or other companies slightly less than 10% on the benchmark. So these fund managers are really just rushing to add further tech exposure to match the benchmark's gains.
Are we expecting this trend to continue?
For the time being, I think that's really the narrative, especially when you see all these surprise earnings, right? Avantas had I think they lifted their earnings outlook and also saying that they are expecting this AI boom to last for multi-year. And also Samsung, SK Hynix also surprised the upside. So these are the new or fresh catalysts that are pushing for tech to really continue its rally in Asia. But also beyond that, when we spoke to Winnie Wu the other day from Bank of America, she was also telling us that this is the multi-year theme and that China, Japan, and India actually provides more diversification opportunities. So even when we have tech dominance in Asia, it's still less of a risk compared to the U.S.
There we go. This is a joke, our version of weight shaming. Look at TSMC, as Winnie was just pointing out, right? We're nearing 50%. TSMC's weighting on the index. The rest, a couple of hundred more, are the other side of that. Fantastic piece. Winnie, thank you so much. Winnie Xu there on the latest. You can read, by the way, the take today. There we go. On your screens, on the Bloomberg terminal. It's also on Bloomberg.com. Plenty more ahead. Right, welcome back. So in case you missed this, we did just get the latest official PMI numbers a few minutes back, and it's the manufacturing gauge actually. So a streak of below 50s, number one. And number two is when you look at the forecast, the estimates is 49.6. That's the median. If you look at the low end, that's actually even higher than the actual number. So this one actually missed just about everything. But also seasonal with Golden Week, so you do have that somewhat of an aberration there. But does this actually indicate that the October activity numbers, which should be out in a couple of weeks, about 2 weeks or so, might also be on the softer side of things? The currency certainly adjusted once we did get that print coming through. Okay, that's the number for now. We will just have a look at earnings too. So you have the likes of, well, not Baba and Baidu. Baba and Baidu were just really on the tech space as well. We are getting some pressure there. BYD is one watch, given the reaction that we're seeing, or allergic reaction to the earnings. We were down as much as 6% at one point. So you had a 33% drop in net income. A lot less, but still a drop in revenue. And we're going up against the possibility, because of we don't know what will happen to the subsidies next year. But HSBC, who will be joining us in about 40 minutes from now, they do see the possibility of a demand cliff going into next year around the subsidies conversation on EVs, right? But when you look at the overseas market, so their preference is actually, if you go with OEMs, pick the OEMs with a big presence outside. BYD is a very good example of that. But if you had to pick within the supply chain, within the auto sector, it's OEM. Well, it's not. It's suppliers over OEMs. Anyway, I'm not going to say more and steal the thunder of Ting Yuqian, who'll be joining us in about 40 minutes from now. The other things worth noting is we're looking at the banks. Can I also ask my producers to bring up the summary of this earnings season so far? It would be good to touch on that as well. Yeah, nothing happened in the banks. Change that, please. Yuqian out with earnings as well yesterday. And, of course, the day before, we did get earnings coming through out of Maotai. Yeah, nothing much here. Okay, what else did we talk about? Is Yvonne there? Maybe I can bring Yvonne in. Yvonne, what's going on where you are? So
yeah,
I think we have all the leaders. Go ahead.
Yeah. Yeah, we're still waiting for when President Xi is expected to make that speech. CCTV says somewhere Friday morning. Our schedules suggest that it was in the later afternoon that we're going to have this handover ceremony. So we're still kind of figuring out the timing of this. But you talked about some of the key bilaterals that Xi Jinping has. It's a pretty busy day of diplomacy after, of course, this big trade deal with the U.S. was at least finalized in some way yesterday in Busan. So Xi's meeting with Carney, also meeting with Takaichi later on today. And as well, Xi's going to meet with Lee Jae-myung, the South Korean president, on Saturday as well. So still looking at a bit more a busy day when it comes to the Chinese president here today. But yeah, you mentioned that PMI number. I think it's the longest streak of declines we've seen for that PMI number of a manufacturing side of things in almost a decade, right? It begs the question whether we're going to see a bit more stimulus come through from policymakers in the next coming weeks or months.
Yeah, I mean, we'll see. I think given the fact that you are maybe slightly getting a better picture in exports because of the tariff conversation, we'll unpack all of those themes. The next hour of the China Show is just ahead.
Welcome back to the China Show. Here's a look at the HSI half hour into the session. And yes, when it comes to China and the U.S. really dialing down the temperature and trying to ease trade tensions, it looks like that story, we've looked past that here right now, and we are seeing a little bit of downside when it comes to Chinese equities here this morning. 8 shares seeing a downside about 0.4%. I think earnings has been certainly one disappointment there. You look at things like the BYDs, like the liquor makers, like Huijiao Maotai, Wuliangye this morning as well. We are seeing some decent misses when it comes to the earnings picture in China, Dave.
Yeah, I think it really sums up, I think quite accurately what we've seen so far when you look at the earnings picture. MSCI China is about 80% in, give or take, and I think most, about 60% have actually missed the mark, where we have data, of course, to compare the actual to the estimates. And I think slightly less, about 50, just over 50% have missed on on the top line. So when you look at the underlying state of the economy, it certainly does underscore the challenges there. You have 49, which missed every single forecast. The benchmarks are coming up. BYD is coming up bottom of the screens. Just to underscore as well some of the pressure we're seeing. Now, this doesn't also capture the entire picture as it pertains to equity markets in the region today, right? Because on top of all of this, you have the Apple story and the after-hours move there and the lift that's actually giving. Can we look at Chinese benchmarks, please? That's actually giving to U.S. futures, for example. We'll get into the other sort of non-China-related themes in a moment. There's also interesting Japanese story today with a 2-year auction, I believe. And dollar-yen, which was above 154, we're below that following the inflation print, which BE now says effectively clears the path for a rate hike at the next meeting. Some weakness coming through. Although we're coming off lows a little bit on HS Tech. We were down over 1% a few minutes ago. Right. Just in case we're looking at the support level, one that has held on MSCI China, bottom of the screens, 8770, is the 50-day, which at one point last few weeks or so, it was at risk of a firm break of that level. We did manage to close above that, and the last 4 instances we've tested that has proved to be fairly resilient. So catch me when I fall, catch you I will when you fall, if you fall. Okay, Yvonne, let me bring you back in.
Yes, I always hope you can catch me when I fall too, David, during the shows. That's why we got each other, right? When you take a look at these equity markets as well, and what's really been supportive is certainly one thing is that, we have seen at least both sides, the U.S. and China here in South Korea, have worked to at least de-escalate the latest flare-up in trade tensions, right? You talk about, the fact that the U.S. was able to kind of resume the flow of rare earths, soybeans. On the flip side, China able to actually bring down tariff levels, or at least the U.S. was able to bring down tariff levels to 47% for China. That should still keep the manufacturing base in China, relatively speaking, competitive to this part of the world. So certainly there are some tangibles here. Morgan Stanley is coming out with that latest note saying it's a truce, but not quite a treaty here, because given that there was no sort of joint readout, nothing kind of was signed, there is still some vulnerabilities that things could fall apart, right? Let's get to our chief North Asia correspondent, Stephen Engel. He is joining us now live outside the Leader Summit here in Gyeongju as we kick off and count down, of course, to that speech from Xi Jinping. Steve, what's on tap today?
Well, it wasn't really, first of all, let me talk about yesterday, just picking up on what you just said. It really wasn't a trade treaty, was it? It was a trade agreement between Donald Trump and Xi Jinping based on that framework agreement that the two sides and the negotiators finally came to agreement on after 5 sessions of meetings, whether it's in London, Geneva, and then Kuala Lumpur. So the big question now is what is going to be the follow-through? Because we've been down this road before. We've seen progress only to backslide because of various issues that do crop up, whether it be economic or geopolitical. So again, it's good that they're going to revisit this. That's what Donald Trump says. We have a deal. Now every year we'll renegotiate the deal. Routinely extended is how he put it. But already we are hearing from the U.S. Trade Representative Jameson Greer speaking on Fox Business, essentially saying that we're still going ahead with that investigation launched a little bit about a week ago into China's compliance in the first trade deal, where the U.S. Corn Association and the Soybean Association say China fell well short of its pledges to buy about $80 billion worth of American ag products between 2020 and 2021. Granted, the pandemic happened, the world shut down, so there's a bit of a pass on that front. But again, we have to see the follow-through from the United States and also follow-through from China. Now, spinning forward to today, Donald Trump back in D.C., it's Xi Jinping's stage right now. He's going to be meeting with Mark Carney of Canada, meeting with Sanae Takaichi of Japan. He'll be giving a speech. We're hearing at some point today. So it will be his opportunity to kind of give what I expect to be a similar type speech, and that is, supporting the multilateral approach to global trade. Yvonne?
Steve, let me step in here, because I just want to ask you, too, what your sense is of the next 12 months, right? So it seems we'll be operating on the sort of 12-month, forward 12-month window where there's going to be a reset. can we at least assume that the temperature has been brought down enough that the next 12 months will be at least better and more predictable than the last 12?
Absolutely. The temperature has been brought down, but it's like a fever. It could spike upwards pretty quickly depending on what happens, right? Or what does not happen, meaning if there's not compliance or perceived non-compliance on these agreements, right? So there's going to be sticking points. Even Xi Jinping mentioned that when you have the world's two biggest economies, the world's two biggest superpower, they're not always going to see eye to eye. There will be friction from time to time. The key, though, is to use this as a springboard to make sure that that friction does not turn into an outright fracas, right? So again, it doesn't necessarily mean there is peace between the two countries. It means there is a prolonged truce, that they need to have continual dialogue and continual back channel discussions. I think that is going to be key. Keep in mind, we had 5 meetings behind the scenes with the negotiators, whether it was Scott Bessent and He Lifeng, Li Changong of the Chinese, and also Jameson Greer. Howard Lutnick was involved. They got this meeting yesterday done after 5 meetings. Previous administrations from the United States and previous presidents of China had ascribed to strategic economic dialogues held every year to smooth out these issues. They scrapped that in the last decade. So, there are proponents who say we need this constant dialogue. Yes, Xi Jinping, Donald Trump, had 3 phone calls in the last 6 months. They had multiple letters written to each other. They had constant contact. That's what Xi Jinping says. But it was not enough, obviously, over the last 6 months to diffuse what was tit-for-tat retaliation on each other's moves.
Yeah, it's a good way to point there, Steve. At least they're two willing to meet, right? We talked about April potentially there, where Trump is going to visit Xi Jinping in China, followed by President Xi visiting the U.S. So certainly that means the exchange could continue, maybe well into at least a year. We'll see what happens, what comes next after that. Our chief North Asia correspondent, Stephen Ingle, there, joining us there outside the Leaders Summit here in Gyeongju. We got more ahead coming up. This is the China Show. All right, we're joining you live from Gyeongju here, of course, as we're expected to hear from President Xi later on today as well, and certainly coming on the back of what has been talked about as a pretty successful discussions between Presidents Trump and Xi. Let's bring in our next guest, Jonathan Czin, who's the Michael H. Amakoss Chair in Foreign Policy Studies at the Brookings Institute. He's also a former China director at the U.S. National Security Council. Jonathan, it's great to have you on the program. Obviously, we talk about the politics aside, we have to take a look at when it comes to the optics, right? Everything seemed quite positive, and flattery certainly helped in all these discussions. I'm just wondering, beyond just the optics, how long can this détente between U.S. and China last?
I think that this is likely to prove pretty ephemeral, right? I think there was some ambiguity in terms of the agreement, right? Like even with the rare earth export control, said that they would previously that they would not be making sales to U.S. defense industry, for instance, right? And I think we've seen this play out in previous iterations of the trade negotiations, right, where the deal kind of marks the beginning of the actual negotiations, and the two sides have a contest over what was actually encompassed in the negotiations, right? So I think that is probably likely to be the story here again as well.
It seems like with China, by holding off on rare earths, holding off on buying U.S. soybeans, they were able to at least bring down effective tariffs, as well as relaxed export curbs from the U.S. Who do you think at the end of the day came out stronger in these trade talks?
I think definitely China. I mean, they conceded very little, and I think what those rare earth export controls signified in the run-up to this meeting is that Xi Jinping, to the past year, reacting to U.S. policy initiatives, was really shifting from playing defense to playing offense, right? And I think what was key was for him and from Beijing's perspective, were the Trump administration to mollify Beijing over the previous 6 months. speculation, and apparently a correct one, that he could make this move with not just with impunity, but that it would be useful for extracting concessions from the U.S. Beijing played its hand quite well going into this round of negotiations.
Jonathan, David here. I think we're just going to work out your audio. I think we're looking at some issues there with Jonathan's audio. We'll try and sort that for you, and we'll try and get him back once we're able to work out some of the tech cobwebs there and some of the gremlins, and hopefully they stay on the sidelines. Before we get to that, though, and bring him back, almost quite timely as well, we are getting some lines coming through. Let me just bring up my headlines here. As far as this meeting, the APEC Leader Summit is concerned, so we are hearing from Xinhua, so official media reporting, the Chinese president, in what context and whether he's speaking in a speech or to leaders is unclear, but some of the lines coming through here, talking about how the Chinese president is calling to safeguard multilateral trading system. She is calling to build open regional economic environment, and also to be promoting an investment and liberalize investments, of course, a more inclusive trade conversation. He's also calling on APEC to jointly keep the supply chain stable. Okay, that's a bit more pronounced and directed given the recent news flow. But so far, that's what we know so far. We'll get you more details once we have more information coming through. We'll take a short break, and we'll see you on the other side of it. This is The China Show.
All right, we continue to get some lines crossing here from President Xi Jinping, according to Xinhua, where he is addressing APEC. And this is what we're seeing so far. So jointly maintain the stability of supply chains, and he's urging deeper cooperation in the financial field, but really calling a joint collaboration to keep industrial supply chains stable and smooth, and to promote digitalization and the greening of trade as well. So really kind of honing in, as Dave mentioned, this whole theme of inclusive development here, and really China not to close the door to the outside world, will only open, and it's still wider. I think it's a message to the world that, China is still open for business and still wanting to do more, of course, in terms of deals here. This on the back of what we heard from this trade truce between the U.S. and China, at least when it came to rare earths, that they are at least suspending the export of curbs of those critical minerals here for at least a year. And that was really what led to a lot of concerns around supply chains and the possible disruptions on that, given that these critical minerals are going to everything from EVs and high-tech technology. So certainly they're sending a message that there's nothing to worry about, and really reassuring the APEC leaders out there here. This as we continue to see more from that speech. We'll get a bit more once we do see it here. Still with us is Jonathan Czin, who's a Michael H. Armacost Chair in Foreign Policy Studies at the Brookings Institution, also former China Director at the U.S. National Security Council. Jonathan, hopefully we've fixed all the tech sort of glitches and the like here. I wanted to get your take on when it came to chips, and really we didn't get much clarity on really what the U.S. approach is when it comes to chip exports. What do you think is going to be the strategy moving forward from the U.S.? Because it seems like Blackwell, I should say, was not in these talks. How much more clarity can we get on that front?
Yeah, and I think what's really striking from President Trump's comments on the plane is how much ambiguity he left about this, right? When he was asked on Air Force One about this, he said, well, that's between Jensen Huang and the Chinese companies, and we're just the referees. My sense is maybe that he was considering actually moving forward with some kind of deal, and may have walked back from it, but it's unclear, and it seems like he left the door, if not wide open, then at least ajar to this possibility. Right? And I think what Beijing has done effectively in these discussions is, after the Trump administration rolled back the export controls on the H-20, instead of taking up the Trump administration and Nvidia on that offer, what the Beijing did instead was squeeze Nvidia. And I think this is very much one of their tactics, that they don't punish their enemies necessarily, they punish their friends. And what this has led to is Nvidia lobbying very hard for an additional rollback of export controls on their chips.
Jonathan, David here. I want to get your sense. So I was trying to I was trying to think this through this morning because there were so many details that came out in terms of what, quote unquote, was achieved, and not to take anything away from it, there was some progress on many multiple specific issues. But I just had a look at that same list, and it seems as if both sides simply took back their initial threats to each other. And some of I guess they really hardened their positions ahead of these talks and simply removed those barriers. And I wonder, is either side actually better off net, or are we simply back to square one? Let's call it 12 months ago.
Yeah, I think that's right. I think this is back to status quo ante. This is like World War I style fighting, right, where there's advancement and then you just revert back to your trenches, right? And I think for Beijing in particular, that's the win because they did not want a trade war in the first place, right? So, and I think their game in this is to play for time as much as possible, right? So a turn to status quo ante may not be totally comfortable for them, but I think it's far more preferable, right? I think what they've effectively done as part of their negotiating tactics is orchestrate a game of whack-a-mole for the Trump administration, right? So the really meaty and substantive trade and macroeconomic concerns that ostensibly animated the trade war in the first place, none of those have really been addressed insofar as I can tell in these negotiations. Instead, what the negotiations have centered on are these relatively narrow sectoral concerns or even specific firms like TikTok, right? So we're talking about soybeans and we're talking about chips rather than talking about the trade imbalances that President Trump seems so preoccupied with at the outset of his administration.
Jonathan, we were able to see that China using these sort of sweeping curbs on rare earths, that they were able to at least put a cap on export curbs on the U.S. I mean, this is as we start to see China, try to at least develop itself into this sort of tech industrial superpower. Are we likely to see more examples of China really changing the rules on trade as it becomes more of a sophisticated manufacturer?
Oh, I think so. I think this is the thin end of the wedge, and I think it's a reflection of the industrial might that they have developed in recent years, that they have this chokehold in the first place. But I don't know if I broke up earlier, but I think politically and diplomatically, I think what we saw in the past month is that Xi Jinping, after spending most of the past year reacting to U.S. policy initiatives, was really shifting from playing defense to playing offense and trying to take the initiative and shape and control the tempo and tenor of the bilateral relationship. And I think if that is the case, I think that we will likely see more of these kind of bold moves in the coming year, especially because my understanding is that the Trump administration is not yet done with the tariffs and trade measures that it wants to roll out, that there will still be additional trade investigations and sectoral tariffs that will very likely be coming down the pike in the coming year, which will give Beijing plenty of pretext to make more big moves like this or roll back the agreements that they reached just yesterday.
The one thing that I think Trump didn't really budge on, or at least it wasn't discussed, was Taiwan. And Trump mentioned that Taiwan was not even brought to the table this time around. Why do you think there was a bit of hesitation on the Chinese side this time around, Jonathan?
I think it's twofold. One possibility that I've heard is that China, instead of wanting to negotiate over this, wants to take a principled position and say, this is non-negotiable, this is our position, and we're not going to make it part of a trade discussion or some other kind of negotiation. So that's one possibility. I think what's more likely, though, is that I don't think that they trust that Trump will actually stick to any kind of change in rhetoric or verbiage on the Taiwan issue, even if they push for it. Right. I mean, the changes that we're talking about for those of us who are China watchers and for the region are quite significant. But the difference between not supporting Taiwan's independence versus opposing it, which is the change that Beijing was pushing for, that subtlety can be lost on any senior leader. And I think they're concerned that even if Trump uttered the words that they wanted him to, that it wouldn't necessarily result in the kind of policy changes that they would necessarily want to see ensue.
Well, speaking of that, Jonathan, was there anything you think not announced publicly that actually could have been discussed privately among the two sides that might have material consequence in terms of just forming the next 12 months? What do you think? What are the sort of known unknowns at this point to the public?
Yeah, I mean, a couple of the known unknowns. I was a little surprised, frankly, that TikTok did not come up during this conversation, especially since that had been such a point of focus previously. And I think more broadly, getting to back to this idea of how Beijing has orchestrated this game of whack-a-mole for the United States. It's a relatively truncated conversation. A lot of the strategic issues that have been a source of tension and conflict, not just Taiwan, but also South China Sea, China's broader posture in the Indo-Pacific region, those don't seem to have really come up either in these conversations as well. So compared to other bilateral engagements, especially at this level, this feels like a pretty truncated conversation overall, right? And I think it's reflective of the administration's approach to China, which is really suffers to some degree of trade myopia, right? To the extent that they're focused on China, they're really focused first and foremost on trade issues, tech issues, and maybe some other adjacent issues as well.
Jonathan, what was also not discussed, it seems, was oil, despite these new sanctions from the U.S. on Russia. Mm-hmm. Should we expect the U.S. to be a bit more loose when it comes to enforcing these new sanctions on Russia and when it comes to China?
It's possible. I mean, I do think it's notable that President Trump said that they did talk about Ukraine, and that he claimed that Trump said that she had made positive remarks on this. But Beijing is very much part of the problem rather than the solution here, right? So I think that if there is not kind of uniform imposition of sanctions, Beijing will see that as getting off the hook for their extensive support for Moscow's war against Ukraine.
Jonathan, thank you so much, sir, for the time. Jonathan Czin there, Michael H. Armacosta, Chair of Foreign Policy Studies at the Brookings Institution here. He is also a former director for China at the U.S. National Security Council. Just before we just take a short break, we'll just take you to this note coming out of Morgan Stanley on this very topic. So good, but not maybe good enough. It is enough, though, what was happened there to maybe put some slight upside risk to their forecast for next year. But of course, some of the thorny issues will persist. This is Bloomberg.
All right, 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break here right now, and we are talking a little bit more about, equity markets are doing quite well. Nikkei is up 1.2%. You're still seeing some strength crossing to the Japanese currency, 153.75, but still, we're still kind of digesting all the lines that we got from the BOJ, of course, this week as well. Those Tokyo CPI numbers certainly is one thing to watch here this morning. Overall consumer prices were higher than expected there, 2.8% year on year, Dave.
Yeah, we'll get the view from how that actually changes, if not cements or even solidifies the view on the BOJ and that hike that's coming out of Bloomberg Economics in a moment. But just very quickly, so what's that done to the yen trade? So first, the market had to react and reprice on a slightly more hawkish Fed. So we're coming off really one of the strongest days for the U.S. dollar in several weeks. The Bloomberg Dollar Index, case in point, strongest in about 3 months. So that took dollar Japan to above 154, and then we got that CPI print, which then took it a little bit below 154. JGB is also in focus because we do have the 2-year auction, I believe, in about an hour or so. And let's look at the curve, and we're pretty much down, but not by a lot across the JGB curve there. Yvonne.
All right, our team at Bloomberg Economics has been reacting, of course, to that hot Tokyo CPI print. They're saying that reading really puts the BOJ on course for an early rate hike. We also did hear from BOJ Governor Kazuo Ueda on Thursday following that decision to keep rates on hold.
We held today as we want to see more data on domestic wage-setting behaviors. While uncertainty remains high in overseas economies, if we're convinced, we'll adjust rates regardless of the political situation.
Let's bring in Taro Kimura from Bloomberg Economics. He joins us live from our Tokyo studios here this morning. Taro, tell us a bit more about your take on the data. I mean, this was a surprisingly hot inflation print.
Right. Today's Tokyo CPI for October, which is an early indicator for national gauge, so this is very important. It's actually hot. Like it's jumped from 2.4 to 2.8. Of course, it's partly half of it, it's more than half of it is driven by Tokyo Metropolitan's government policy to stop the waiver for their water charges, which is indifferent to the national gauges. But still, I think the reading is very hot compared to the broader market expectations, particularly for services inflation. There are inflation acceleration in labor-intensive services such as hotel fees, as well as some leisure activities reflecting a recovery in consumer spendings, as well as what captured my eyes was the rebound in goods inflation, such as home appliances, such as the refrigerator, which was in deflationary trend because of reflecting the recent strengthening of the yen entering this year, but probably it's picking up again because of the latest weakening of the yen.
So I guess to your point there, Taro, it's the inflation that matters, not so much the water bill adjustments or hotel prices. So what does that mean for the BOJ? What stood out to you from the meeting yesterday at the press briefing?
Of course, the hotter inflation, I think, raised the odds for the BOJ's rate hike in December, in my point of view. It's a matter of timing. The inflation is hot, and I think markets agree with that. So what to watch is whether the BOJ is going to hike in December or later in January. But at the same time, today's data doesn't lock in the December hike because the inflation jump is centered around volatile hotel fees as well as some home appliances. That doesn't mean the BOJ can confirm the underlying inflation is picking up. And UEDA is still cautious on the timing of the rate hike because the lesson from last August market jolt is the reminder that the Bank of Japan is still a major central bank in the world, and its rate hike could trigger jittery markets. So therefore, they also need to navigate the domestic political situation, particularly when the pro-stimulus prime minister is now in the office. So therefore, I think the BOJ will hike either in December or January when market and Japanese political and inflation data are conducive.
Taro Kimura, our senior Japan economist, in Tokyo for us out of Bloomberg Economics there. Just to pivot the conversation, so from Japan, we're looking at earnings. Specifically, we're looking at BYD and some of the automakers. So we're down about 4. We were down as much as 6 or over 6% at one point. So in fact, we were trading at about 9, I think it was 98. So we're back above, which is strange for me to say, back above the centennial level here on the share price. Our next guest actually maintains a buy rating on the stock. Does see a recovery underway that positions BYD for a stronger quarter ahead. Joining us here in set is Ding Yuqian, is head of China Auto Research at HSBC Global Research. Very nice to see you here.
Thank you, David.
So what worries you about these earnings and what doesn't worry you?
Yeah, sure. So first of all, it's a recovery quarter or a transition quarter.
Okay.
So we already know, like quarter-on-quarter perspective, the volume even down a little bit. But BYD do demonstrate a strong earnings resilience supported by the price discipline and OPEC's efficiency. And I got to say, the company is geared for a much stronger fourth quarter and 2026. 2026 is actually the real story here. So where in the first quarter, BYD going to push the Super E platform, where they're going to lead the technology innovation, and also followed by a portfolio model cycle refresh. And also they have a very strong global reach, where the pricing environment is much more favorable. So does the margin. Additionally, last but not the least, I would say BYD's conservative accounting treatment is a hidden asset, which allowed they've been accelerating depreciation, so which allowed them more earnings flexibility in the coming 2 years.
That's cute when they do that, right? It's not very obvious in the financial performance. Okay, so 2026 you say is the year to watch. What happens if we don't get more subsidies?
Yeah. I would say broadly, that's why the OEM sector has been weak lately, because we're now sitting at the fourth quarter peak season. But everyone knows it's partly because of the front-loading sales, because the EV subsidy going to phase out by the end of the year, and also the EV tax exemption going to be halved starting from the beginning of the next. So we are getting the hit. It's probably followed by a first quarter demand cliff. So we are going through this kind of cyclicality. So, but that's also create a very favorable, if any, beta sell down. That should create a good entry opportunity for leader stock like BYD.
What about when it comes to the overseas expansion? It seems like it's going to be a pretty pivotal year next year, 2026, Yuqian. They're talking about ramping up operations in Brazil, Indonesia, Hungary, and the like. I mean, how likely do you think that's going to offset what we're seeing domestically in China?
Yeah, sure. So I would say domestic, in the home market, we do see BYD might reclaim part of the domestic market share back next year because they're going to have a platform refresh. Usually BYD has been leading the technology innovation, which will give them more pricing power and content competitiveness in the domestic market. So once they started to refresh the portfolio, we do see the domestic market, they will be reclaiming the market share. And for the overseas, it will stay solid. They are shooting towards 1.6 million next year from a base of 0.9 to around 0.9 million this year. So of a not a low base, they're still going to sustain strong growth since they have been localized in their global plants, which will support their product pipeline and also brand presence in a broader global market. And I would stress the global pricing and margin environment is much more favorable. So we would say a strong pillar from the overseas also to support and provide buffer for the domestic market.
Yeah, one of the key positives was sort of the improvements that we're seeing in gross margins, right? I think some of the cost reductions in the second quarter certainly help with that. We're talking about, 17.6% for gross margins now. Are we likely to see it basically stay around the high teens? What's your expectation?
Yes. I would say starting from fourth quarter and into next year, we do expect the margin to continue to improve. I mean, the major factor we're watching in the fourth quarter versus third quarter would be a much improved economic scale. Let's say volume, we forecast the fourth quarter volume versus third quarter will be quarter-on-quarter growth will be more than 30%. So significant economic scale and also a better product mix would support on the margin side.
I want to broaden the view across the sector because you covered not just the OEMs, right? So if you had to pick, do you prefer OEMs or do you prefer something down the supply chain, like suppliers, for example? What's a more risk reward? What's better for investors?
Yeah, for current quarter, we would say quality supplier, especially the supplier names with more global exposure, such as cattle, such as Fuyao Glass. So from an earnings perspective, we know OEM is sitting on the fourth quarter cyclical peak, and first quarter next year going to be more volatility being seen in the earnings over there. So I would say in the current quarter and potentially next quarter, we would see supplier in relative terms among the auto universe better positioned than OEM in general.
It seems both on the OEM and supplier side, one of the criteria you're using is really overseas market exposure. Is that a good barometer in terms of being able to pick at least the near-term winners?
I would say in a general sense it is because generally no matter it's OEM or the suppliers, overseas exposure do speak for better margin and pricing environment. Right. So generally overseas business carries higher weight in terms of the profit contribution than the volume or the revenue share. Okay,
but I think there's a but coming. It looks like you're gonna what's the qualifier then? In terms of domestic market, what are the key drivers there domestically speaking?
So domestic speaking, I would say it's about whether you have the key differentiation. Let's say in China you have a new product cycle. If you have a technology edge, that will be the key differentiation. Yeah.
Okay. I know we talked about this before, this anti-involution conversation, and it's down to, at least as far as the OEMs are concerned, almost self-policing. Are you seeing any signs of price pressure starting to go, price competition starting to abate?
Yeah, great question. I know. So I think BYD do demonstrate a very strong price discipline since the anti-involution. Right. But I think we do see, like from industry perspective, many laggards has been refreshing new model at a very relatively low price. Right. So they have been getting market share from a shorter period of time. Mm-hmm. So we do see the consolidation is taking a pause. That's what we've been observing in the past quarter. So it's basically reversing the overall consolidation trend that we've been talking about. But starting from next year, we do see the trend probably reverse back on track to the industry, ultimately still due for a thorough consolidation. So because BYD going to have the new platform and they can refresh their portfolio where they can reset the pricing. So I think the dynamic would change, although currently it's still like industry's consolidation is still taking a pause. But we do believe that's going to reverse starting from next year.
And I know the assumption is the end of subsidies this year. Is that base case? Is there any indication that we could get some version of that extended into or reintroduced next year? What are some of the scenarios you're gaming out?
Sure. So far we don't have the clarification. And I would say if I'm the policymaker, I wouldn't tell you until the end of the year. Right. If I tell you it's going to extend it, you will not buy. So far we don't have it. But let's say usually by the end of the year or early next, we'll get more visibility. So far the industry or the sales channel, the OEM is still building the base case. The subsidy going to phase out. So I'm going to push the sales by the end of the year as much as possible.
Fantastic. Thank you so much. It's always great to see you and speak with you. Great insights there out of HSBC. That's Yuqian there, head of China Auto Research at HSBC Global Research. Okay, Yvonne, I believe we have some breaking news right now. Why don't you take over? What do we know and what are we seeing here?
Okay, we are just getting some lines, of course, from the Federal Aviation Administration in the U.S. They're issuing a ground stop at the Newark Liberty Airport there on staffing. So this has been something that we've been tracking all week here. They're issuing that ground stop citing staffing issues. So we'll see. We hear a bit more. I mean, yesterday they were already talking about average delays of 40 minutes due to some of the staffing issues. So certainly that's one thing to watch here that's happening in Newark here this morning. We got plenty more ahead. This is Bloomberg.
Right, welcome back. You're watching the China Show. It's time for our Trending in China segment. We're looking at what's really making headlines across Chinese media, national newspapers, sparking conversation when you look at parts of social media. So you have state media, and certainly the big story, of course, this week was the big meeting, and you have state media portraying the meeting between the two presidents as vital for steering relations between the two large economies. Let's bring in Min Lo, our China correspondent, on what the tone is like when you look across this sort of broad spectrum of media.
Yeah, I would say it is mildly positive, but there has been a flurry of these state media editorials across the different platforms, from Xinhua to Global Times to China Daily and People's Daily. And the theme here, they're all quoting heavily from President Xi's remarks of President Trump, saying that China and U.S. should be friends and partners, that they can uplift each other, and that China's growth and development actually is compatible with the MAGA theme, right, to make America great again. And the Global Times in particular is saying that there has been views from Washington that is, creating a lot of fallacies about China, talking about how China's growth is over and that China is seeking to replace the U.S. as a hegemony, that these are, the articles are saying that these are not true and calling for U.S. and China to maintain that stable relations. And I want to read you this quote from People's Daily. It says that if both sides faithfully implement the key consensus based on mutual respect, then that can steadily reduce areas of disagreement. And why this is important is because I think the big fear now for Beijing is now that they have cooled down the temperature between Xi and Trump, the concern is that President Trump and his administration might come out with unilateral actions that is beyond the scope of what was discussed and that comes out of the left field for them, because we have seen this pattern of tension, escalation and de-escalation. I think China wants to avoid that. One of the reasons that they don't like speaking to the Trump administration is that they feel like they can't trust their words and how credible they are, right, in keeping to their commitments. So a lot of the articles are talking about fulfilling and following through on these consensus that are reached during the Trump-Xi meeting to ensure that the path remains stable and they continue to have a slow and steady path to the right direction.
All right, Min, thank you. Our China correspondent Min Lo there on what's trending when it comes to local media there and how they are phrasing, of course, what happened here in Busan yesterday. Let's get to some big corporate stories now. Challenging memory technologies is one thing that we're watching out for when it comes to its latest chip. They've begun mass producing an advanced type of semiconductor for mobile devices. Now, it's become the first Chinese company to compete in a field dominated by foreign players like Samsung. The company says it started shipping the advanced chips to unnamed clients. Bloomberg has learned that Germany is considering using public funds to pay Deutsche Telekom and other operators to replace Huawei equipment. Sources say the cost could exceed $2.3 billion. This also means public funds will be used to upgrade Germany's digital infrastructure, which lags behind many other European countries.
Right, for our Bloomberg clients, if you want to rewatch our show, you can go to your TV function, TV Go on your Bloomberg terminal to be part of the conversation. Send us instant messages. If you don't want to rewatch our show, well, that's on you, really. Plenty more ahead. This is Bloomberg.
All right, we're checking out the earnings this morning as well. Amazon shares soared in late trade after its cloud unit posted the strongest growth rate in almost 3 years. Third quarter revenue jumped 20% on year to $33 billion. Investor expectations for the cloud business were relatively low after the company had warned of constraints in getting new data centers online. Oil giant Shell has beaten estimates on profit and maintained share buybacks while paying down debt, showing its resilience to weaker oil prices. The third quarter performance was helped by stronger oil and gas trading, a vital part of the business that struggled earlier in the year amid geopolitical volatility. Chinese solar giant LONGi Green Energy narrowed losses in the third quarter, helped by Beijing's campaign to curb cutthroat competition in the industrial sector. The company reported a net loss of $117 million. It says cost reduction measures helped lower manufacturing costs and shrink impairment losses.
All right, let's take you straight back now from, well, in some ways from the sun to our coverage on the ground at the APEC summit. And of course, it's been a manic week. Yvonne's been tossed all over the place. She made her way from Hong Kong, scrambled into where she is right now. Middle of the night, got woken up and said, hey, we're headed to Busan. And then she's now back to where she is right now. And we're just about wrapping up the show. Her work's not done because a lot more ahead, right? We still have a speech, I believe, from the Chinese president, still set to speak, is our understanding. Jane Fraser of Citi is also set to speak, among others, and I think Nvidia's Czin Huang is also making. It seems like anything he touches and talks about just seems to be turning into gold here, Yvonne.
Oh man, yeah. I mean, before we get to fried chicken, I want to talk about what people are likely going to ask him right later on, because. Right. The whole issue of Blackwell chips, right? The fact that President Trump said he was going to discuss it with Xi, and then in the end said that wasn't discussed after this meeting. In fact, he really kind of put the onus back on Nvidia and saying it's up to you to discuss with the Chinese on allowing access of Nvidia chips to the mainland. Other products besides Blackwell, right? So certainly there's a lot of uncertainty about what this means when it comes to chip exports from the U.S. And I think a lot of questions are going to be getting his reaction to the fact that Blackwell was not discussed. I think he really has been lobbying a long time for that to be part of the discussions. But then again, we've got to talk about, anything he touches, right? Anything from chips to even fried chicken, right? If you take a look at what happened yesterday, I was watching it on local media during that bus to Busan, by the way, while we were coming back from these trade talks. It was just in Seoul, where basically the three big tech giants, right? You're talking about Samsung's J.Y. Lee there, Hyundai, that's the big leader there, and then Czin Huang in the middle. They made it look quite, of course you're going to get chicken and beer in Seoul, right, while you're there. And this little outing itself wasn't able to actually move markets, right? It's not even the place they went to. That place is not even listed, Kangbu Chicken, which I believe was also made viral when there was a mention on Netflix, some Netflix show as well. But even just enough to send the rivals surging as much as 20% today after these photos of these three big CEOs had a bit of a gathering here and went viral on social media. I love it.
Yeah, absolutely, right? So there we go on your screens. Market reaction to the partaking of the fried bird. We also talked about Hyundai, right? That's also coming up. That also actually catching a very strong bid on the back of, again, Czin Huang and the Hyundai store and the tie-up there. It's rare that you see Hyundai up this much, but yes, here we are as far as that's concerned. So I mean, the influence coming through and really coming out of Nvidia. You can really also make, Yvonne, that sort of analogy with all these deals that are really boosting the valuations of AI. And it's just a very strange way to end the show, talking about how it's also permeating in the form of extremely crispy fried chicken and a cold beer. Happy Friday to all of you. We'll see you all on Monday.